there. Joining me here at Post 9 is Michaela Edwards. She's a partner with Capricorn Investment Group and the Sustainable Investors Fund. Capricorn is one of the largest mission-aligned investment firms, managing $10 billion in multi-asset class portfolios. It's great to have you here. Welcome.
Thanks for having me, Sarah.
So outflows and underperformance makes you wonder if the tide is turning for ESG.
Well, we've been through a period of a few years now where we've had record growth in ESG flows. The last numbers I saw from JP Morgan was that we'd had 40% growth in the dedicated ESG universe in the past year. So that means we're literally having thousands of funds managing trillions of dollars in ESG.
So you're saying it was bound for some sort of correction?
I think so. Another point to that, though, which is a bit concerning, is that we saw from Goldman Sachs is that about 60% of the ESG growth has come from existing funds being relabeled or rebranded. So in my opinion, clearly there is some level of issue on the supply side, as well as a likelihood of greenwashing.
So this is what SEC is now going to look into this when it comes to some of those Goldman funds. Do you think that is important for the growth, or could it backfire and make people more skittish around ESG?
Well, I welcome the scrutiny. I think we as an industry should be open around what we're doing and how we're doing it. And I can't comment on Goldman Sachs in particular, but we know that regulation needs to come to bear here because there is no standard for ESG, how to report it, when to report it, the frequency or the materiality across sectors. So I would welcome more regulation, more scrutiny, and hopefully we can get to a standard as we're seeing with the accountancy rules, where we're having the GAAP and the IFRS coexisting.
So you're saying you want to see a world where the SEC will go after companies and fine companies for misinforming, misrepresenting information around ESG? Is that the goal?
Well, I think there needs to be a global standard and consensus about what ESG really is. But beyond that, there's an opportunity here to integrate sustainability in a broader sense. And that goes beyond just using third-party data. We've seen low correlations between the largest data providers on ESG, which shows that even the data providers can't agree what is material.
Well, Elon Musk called it a scam after he was kicked out of one of the prominent ESG, I guess, funds. But is that legit? Because they are such a clean energy company?
Well, what I can say is that I think Tesla has been just a revolutionary company to push all the incumbent automakers to jump on the EV bandwagon. And the impact of that in the broader auto industry and bringing down global emissions in the transport industry will be huge. But I think the point you're making is around the differences between the ESG data providers on how somebody sees a Tesla versus an oil and gas company, and that they can be so divergent on those views. So how should investors actually tackle that?
Well, what is the right answer? And just to add to that, this war is also making us rethink what ESG is, right? Because of the dependence on fossil fuels is creating huge problems for Europe and our dependence on Russia. Now we need the oil companies to go the other way and pump more.
If anything, I see this as a great opportunity to secure our energy supply and not just be reliant on oil and gas. So how can we secure renewable energy sources across the U.S. to not be so reliant on oil and gas going forward?